welcome to our Native Delivery TCO Calculator Explainer video. I'm Angela Diffley, the co-founder of the Restaurant Technology Network, and I'm joined by my friend Zach Oates, who's the founder and CEO of Ovation. Hello, Zach.
Hello.
Thanks for joining us today. And Ryan Pershard, who is the Global Operations Manager for GetSwift.
Hi, everyone.
Hi, Ryan. So
Hey,
these
Angela.
two gentlemen were instrumental in putting this thing together. And we want to have a casual video conversation between the two of them to sort of walk you through some of the attributes that are contained inside this TCO calculator. If you'll scroll down a little bit, Zach, we'll talk about the overview here. The overview is a description. So what this calculator is meant to do, it's an impartial, jam-packed with formulas, smart calculator designed to help you decide which delivery model really is for you, right? Are you looking to go to native delivery? Do you need to kind of do a stopgap delivery as a service hybrid model before you get to native delivery? Or is the hybrid model just the way forward for you? Or do you want to rely on third-party delivery companies to help you fulfill orders? So it's really a calculation of your real customizable attributes that allows you to come up with sort of a formula for success when it comes to delivery models. And we've taken a lot of things into consideration, maybe not everything, but as many attributes as we could possibly muster between everybody in that work group that's been working on this for almost a year. And then what you'll do is you'll download the tool and you can go ahead and make it your own, right? So if you scroll down just a little bit, Zach, yeah, you can download it there, make it your own. This is a Google Doc. We'll teach you how to do that. But if you scroll down, we'll see here are the contributors. As you know, Ryan and Zach joined me today. Christopher Siebes and Skip Kimple were also major contributors, as well as the brands you see at the bottom of this page. So with that, I'm going to toss it off to Zach and Ryan, who are going to go through the calculator itself and just explain some of the attributes and kind of walk you through how to best use the tool. Zach?
Yeah, thanks, Angela. And feel free to go through make sure to go through the instructions here, the assumptions. But the first thing you're going to want to do is to go down here to File, download it as an Excel, and then you will have this on your computer to go through. What we're going to do is we're going to go actually into the calculator section of it and walk through line by line to give you an idea of any tips to think through this. So going over to the calculator tab, what you're going to be seeing here are the variables on the far left, the explanation, followed by an example that is not meant to be edited, and then the section that is meant to be edited. So we have the native delivery, delivery as a service, and third-party delivery. You'll enter in the numbers for each of those different scenarios. So that way, at the very end, you can see the calculation that will show you profitability, revenue, etc. So to start off with average order, this is the average ticket size in dollars. You'll note that it is different across the three because maybe your menu item is different. Maybe you're pushing different items. So based on historical data, you could look at your third-party delivery and look at what you want as delivery as a service or native delivery. And that way you can see exactly what the different items are. A lot of people have different prices for third-party delivery to compensate for those fees. Hence, we give you the option of calculating these, the average order as different values.
Yeah, and Zach hit that on the head. And you know, a quick follow on that one. You know, we're going to see the same thought process against gross profit margin. So this is going to be, you know, what are you actually making off of a ticket, right? So after you put that hamburger, that fry, and that soda together, you know, when we look at delivery, what money in terms of profitability is left for you to build or build up your delivery executions. And so, as Zach mentioned, depending on the model, you may have different prices, higher, lower. As you could imagine, if one price is higher than another in a different model, you're probably going to see higher profit margins. In some cases, as Zach mentions, that's to compensate for the you know, business models, depending on, you know, some of these avenues. But yeah, that's what we're looking at there.
And one thing to note is it is important to make sure that the number values stay the same. This should always come out to be a percent. If it's not a percent, it will break the calculator. So if it's $1, keep it $1. If it's a percent, keep it a percent. Hence the examples over here to make sure that we're tracking that. Average deliveries per day, pretty self-explanatory. just take, if you track your average deliveries per week, just take that number and divide it by 7. So you can get an average delivery per day and fill that number in there.
Yeah, and then the only thing I would add to Zach's note there is, again, we made this customizable. For example, one of the benefits of third-party delivery is going to be increased order volume. So, exactly. So, what Zach's doing now. So, through your own channels, you might be getting, better margins perhaps at lower order volumes. At third-party, higher number of orders at lower margin and things like that. Then just kind of going into the next piece here. So some of these categories are going to be specific for different modes of delivery, right? Different models. And so for native delivery specifically, and this being the first of those unique fields, is going to be how many hours per day are you having drivers shifted for, right? So with native delivery, you're bringing that in-house, you're controlling logistics. And so the important part of this calculator is not only revenue, profit, but then also your cost structures. And so what we've done is put in the unique cost structures as well for each model. And this is going to be the first of that for native delivery. As you can see here in the explanation, the way you want to do this, again, this is on a daily basis. We can extrapolate these at the bottom of the model. But, do you have 2 drivers, working 8-hour shifts? That would be 16. Do you have 3 drivers working 8-hour shifts? 24. And then in our model here, we're just looking at 1 driver, 1 shift, 8 hours.
Yeah. And as you can see as well, because both the cost per hour for drivers and the hours per day, they only relate to native delivery. You'll see these NA columns. These are not factored anywhere into the calculator. So you can write whatever you want in there, but it's not going to change anything. So just make sure that if it says NA, it's not an accent, leave it blank. And then so going along with what Ryan was saying, the cost per hour per drivers this is where you calculate that. And again, that's the cost of a single hour of a driver time. So if you have 2 drivers and they're each getting paid $20 an hour, that would be compensated. You would put $20 an hour here, and the fact that you had 2 drivers working for that 1 hour, you would factor that in the column above that. Oh, one thing to note too, this does not include tips. So tips, because they are not a cost to you as the restaurant, they're not factored into this model. Sure, the driver may make more than $20 an hour at the end of the day, but that's not coming out of your pocket. So that's not factored into this.
Yeah, and then the one thing I want to note here really quickly, we have it in the explanation, and just so everyone doesn't get confused, a big part about bringing either starting a fleet or expanding your fleet is the idea of liability, right? And so there's a cost associated with bringing a driver online, bringing them online in the operational sense. And so, Zach and I have looked at this a couple different ways. There's many opportunities for you to factor this cost in, which is something that we got a lot of questions about. And when you think about it simply, what we're talking about is something like insurance, right? You are bringing on a human to work for you. Not saying that driving is dangerous, but, I guess from a legal perspective, for lack of a better term, you want to protect your employee, you want to protect your business. So you're going to need to factor that cost in. And so the way that we looked at this, there's a couple ways. So if you wanted to do it here, what you could do is you could take, go to your insurance agency, tell them you're looking to do this, whoever insures your business, or if you're opening up a new policy, get a quote, and then you can break that down by hour, right? So you get like a monthly quote, for example, and then you can break that down, right? You can do a small calculation of what is that sum per month per driver, and then what would, if I'm doing 8 hours a day in terms of shifts, times 30 days for 1 driver, that's 240 hours. You can do a quick calculation there and amortize that against the cost. So you can inflate the cost per driver per hour. And then the other place you could put this is what Zach is highlighting now is monthly fixed cost. So if that seems a little complicated, then you can just take that flat rate. Let's say, your quote from your agency, your insurance agency comes back, it's $200 per driver per month. So you can put that here, right? And then you could do simple multiplication. If you have one driver, and let's say it's $200, it's 200, one driver is 200, two drivers would be 400, et cetera. So we got a lot of questions about that. So we definitely wanted to make sure that, that was clear for everyone.
Yep.
Oh, and then this one's me. I was following up there. So customer delivery upcharge is something that a few people asked us about. The idea being here, as you're moving through different models, if you're starting to shift maybe some of your deliveries from third party to in-house, or you're starting from scratch, what have you, and consumers are used to ordering through apps and websites and maybe having to pay surcharges for delivery, this is possibly an opportunity for an operator to do it as well. Help recoup some of the cost of going native or doing delivery as a service, where you're getting that order but then sending it out to maybe a local courier for fulfillment. And so, we basically, it was 50-50 with some of the operators in the group. Some people said, we'd prefer to just do free, and in that case, you would just zero this out. And some folks thought it would be a good idea. And there was varying amounts that folks were, thinking about $2, $3, $5 is the example here, but that's what's going on there.
Yeah. And then going down that's revenue coming in, and then there's fees going out, right? If you're doing delivery as a service, you're having someone fulfill an order that you are taking, you're bidding that out. Here's where you can put in how much per delivery that fee will be.
Yep, exactly. And then, as Zach mentioned, another one of those cases, as you'll see, really just applicable to that model, where you're looking to get some sort of fixed rate, hypothetically, to fulfill your deliveries. Next one, something that folks are pretty familiar with. So obviously very unique model when it comes to third-party delivery. Third-party delivery usually encompassing one of the big marketplaces that we're familiar with. We'll leave them nameless for now, but big aggregators bringing a lot of the restaurants together, and they charge for doing that end-to-end process of producing and delivering that order. 20% gross of your total ticket, and so as we mentioned, we're looking at both profit and cost structures. So we needed to factor that in as well.
Yeah. And if you're using, say, 3 different DSPs and they have different rates that you're using, you can take an average or a weighted average based on how much volume you do per delivery channel. So that is one number to encompass all of those. And like I said, if you want to get fancy, weighted average, otherwise an average. And then we have the monthly fixed cost. Ryan talked about insurance. There may be other things such as, third-party aggregation software, different things for delivery. So you can factor those in for each scenario, and really to evaluate what it is. To get a full picture, you probably can assume that there's going to be technology that you're going to use across the board that we have factored out, such as we factored out things like point of sale that you're going to need regardless, factored out some of those things. So that way it's looked at, what technology do I need just to do native, just to do delivery as a service, just to do third-party delivery. In this specific scenario, that we just modeled out as the base case, we have 0 here because you may not have anything, right? You don't necessarily need any other additional software. Whereas if you're doing native delivery or delivery as a service, you're going to need something typically to do that. Like I said, either insurance, technology, but you may have a third-party aggregator that you'll want to factor in that cost, that monthly fixed cost here.
Yeah, for sure. And yeah, Zach hit it on the money. This is something, unless you're running a ghost kitchen or something like that, which is, a unique case growing very rapidly. There is a kitchen that's sort of already in operation. There's, a cost of doing business that's already been sort of compensated for. And so what we're really focusing on in this specific session about native delivery is in terms of really building out, managing, analyzing delivery itself. These are the costs, which is a little bit redundant, but this is what Zach's saying, but these are the, the costs specifically that go with that. And finally, we have the loyalty coefficient. So this
is one that we went back and forth and back on, just to let you guys know.
Yeah.
Do we include it? Do we not include it? And just to be very clear, Ryan's going to explain what this is, but if you want this to not be included, I'll show you how to remove the loyalty coefficient factor. But note that this is a very interesting point, and this is a huge differentiator of native and DOS versus third party. So
yeah, absolutely. So Zach again hit the nail on the head. So what we were trying to encompass here is when we were going through this, we're talking to a lot of operators, we're collaborating with vendors. Everyone's kind of going, hey guys, there's a big upfront investment to do this, delivery as a service, maybe not so much, but definitely native delivery. We all kind of understand the benefits here. We all get it. And so to kind of summarize what that idea is, it's that the upfront investment in the soft investment in something like delivery as a service, and definitely for native delivery, the goal is to own the channels, own your channels where you're creating orders, receiving orders, and then fulfillment as well. By owning all those channels, you get access to very powerful data that helps you to improve your business over time. It allows you to start thinking almost like a technology company, right? Looking at the lifetime value of a customer. How do you manipulate the data to get someone to buy more, understand when someone's buying, increase basket sizes? And so to keep a long story sort of short, the loyalty coefficient was an attempt to encompass that in a metric. So when you invest in native delivery, it's kind of like investing in the stock market. You're getting a compound return back. So over time, you're getting more customers into that funnel. They're ordering more frequently. They're ordering more. So that revenue line is kind of like trickling up and to the right over time, hopefully. And so our goal was to try to encompass that in a metric, because that's sort of the big payoff at the end of the day, in terms of all of this. We're talking about, a delivery, trying to focus a bit on native delivery. And, everyone would kind of go, hey, Zach, hey, Ryan, what's the big hoopla? Why is this so interesting? And that's kind of what it comes down to. And so, third-party delivery marketplaces get paid a great premium to handle that end-to-end process. So obviously, there's going to be some upfront investment as an operator that will hopefully lend itself to, greater successes down the line. Anything you would add there, Zach?
Just saying that when you own that customer data, right? So someone orders on a third party, you don't know who they are as far as their phone number. You don't have their email address. You can't invite them back. You can't invite them on to order with specials and things like that. Now, if you aren't doing anything with marketing, right, then you could leave that as one, because if someone isn't going to come in again because you have their data, then there really isn't a lot of loyalty coefficient here. But if you have tools and processes to use that marketing data to put it here. Now, what should it be? Should it be 1, 2, 1.5? The concept is we've given it a little bit of a bump here, 1.05. if you want to negate the loyalty coefficient, change those to 1. That will make it so that everything is even across the board. But we feel like, again, it is there is, oh, not 11. That would be.
And Zach, 1.05 is the equivalent of 5%, right?
That is correct.
So just so everyone kind of knows, so if you put 1.1, it would be 10% that you think that lift could be, et cetera, et cetera.
Yeah, exactly. So now for the drum roll, right? Given all of this data that we have put in here, and again, this is not a specific example from any one restaurant. These are just general numbers that restaurateurs have given as far as, hey, let's put these numbers in. These seem realistic. And given that set of numbers, we can go down here to the punchline, which is you could look at, we'll go through this line by line. The first one is per delivery revenue. So you'll see the revenue that goes across, and then per delivery profit. Obviously, you understand the difference between those. Do you want to talk about, and then we'll have daily revenue and daily profit. So you could look at this from a per delivery view. You could look at it as a per day view. And then we have the revenue and profit comparison, where this is going to look at what is, given these numbers, what has the highest revenue. As these numbers change, the highest revenue portion will change up here. So just for example, if I did make that 11, you could see then this becomes, native delivery becomes highest revenue and most profitable. So these numbers will change dynamically. And the daily profit comparison, it'll show you, given these set, what is most profitable. The negative numbers here will show you how different it is from the highest revenue. So looking at daily revenue comparison, and basically what we're doing is we're just doing formulas on the numbers up here, just to make it a little bit easier to go through. So you could see that while you may make $500 less on the daily revenue comparison for native and for delivery as a service, when you switch it to profitability, due to the fact that you're not paying that large commission, even with the technology fees, native delivery is the most profitable. Delivery as a service is $304 less profitable, and third party is $680 less profitable. So this is just a quick comparison so you can see easily what the difference is between the daily revenue and daily profit.
Yeah, and the only thing I would add really quickly is, I guess you would say, hey, Ryan, hey, Zach, why have you kind of, brought these specific metrics to the forefront? Why did we sort of do them this way? And so I think, our thesis is that there's, 3 sort of models that exist today. There's really many more that exist in terms of hybrid models where a restaurant operator is doing the delivery and, a marketplace is creating the order, or vice versa. Lots of things going on, lots of ways to do this. Now, I think our belief is that there's going to be a blend, right? All of these are going to contribute to the operations, the delivery operations, the logistics operations of a restaurant group. And we wanted to be able to give the opportunity for someone who's really using this to figure out how to move their business, how to move the needle, how to optimize, how to do that, right? And how things will change throughout each different model with little tweaks here and little tweaks there, increasing a basket size here, lowering volumes here, increasing profitability there. And so what Zach, outlined really nicely is kind of the flow of what are the different areas you can look at after making those tweaks, right? So, starting off with an individual basket, what's going on, right? So that sort of first section that Zach has made there, following that up with what do those tweaks aggregate up to, for a day, right? And so you can kind of understand. And we, Zach and I always kind of say, like, if you look at it at a sort of a small level, granular, and it works, when you kind of scale, then you know there's going to be success there as well. or, possibly failure if you've assessed that. But, and then daily revenue comparison, just a little bit more granular there, differentials. And that's more, I think, for knowledge in a greater sense. We've built this for any wide range of operators, whether you're a huge multinational or, you've started with your first location, maybe you're going on to two, right? And so we just wanted everyone to be able to understand everything. And maybe, some operators didn't understand that, this model might have been highest revenue, but this one might have been more profitable. And so just helping folks really direct efforts.
Yeah. And because these calculations up top are looked at a, per delivery, per day, per location basis. So it ends up being, these numbers are what it's like, as he said, per basket up here, and this is per location here, right? So we're looking at this as a single location. So for example, if for the monthly fixed costs, you do want to make sure that those are by location. And then down here, you can edit this so you can see how many locations you want to see over how many days. So if you want to see 9 locations, it'll look at the profit when looked at over 9 locations over 90 days. So that way you can get that full view of the profitability of each section. Anything else, Ryan, that you want to mention about either the results here or the calculator inputs on the calculator tab?
No, I think, I think we tried to not be as broad, but I would say encompassing, right? So that as many people could use the calculator as possible. I would just say, yeah, definitely just make sure as you're going through, really make sure that you're looking at, Zach, if you just go over and just go to A20 for me really quickly on the left-hand side there, and just really make sure you're looking at these sort of specific things when you're going through, right? This is average deliveries per day. Just make sure that you're thinking about that number. Other places we have per month. And so, just make sure, some things we'll aggregate up for you via formula. Some places, it works differently, but yeah, just, make sure that you're paying attention to those, so that those numbers come out smooth at the bottom. And then you can sort of, depending on the size of your organization, sort of extrapolate from there.
And if you are interested in getting down into more depth, hour by hour, you can click into each of these native DOS and third-party tabs following the calculator and adjust the cells based on the hour. We have 24 hours here that you can adjust specifically for any of the factors that play into it. Regardless of which cells you are editing, make sure that you are editing, or regardless of which tabs you're editing, make sure you only edit the yellow tabs. These other tabs up here, they're calculator tabs, and so you don't, or calculator cells. So you want to make sure not to edit those. So only edit the yellow cells if you are going to look at it on an hour by hour basis.
Yep. And then the only thing I would add is kind of this essentially, I guess, may seem a little bit silly, but I think Angela might have made the recommendation again, right? Different types of businesses, some are 24-hour, some may just be breakfast, some may be half the day. So all sort of different situations that you may be able to model here, depending on your business, an ability to, understand when you might need more delivery, less delivery. So you can, look at your revenues versus your cost there, right? You have maybe if you're an all-day restaurant, things are pretty calm during the day. Towards dinner time, they ramp up, and you want to make sure that you have an ability to get granular and look at these use cases or situations. That's what this is for. And so if you want to get, I guess you would say, the sort of front end calculator, maybe a higher looking view, this would be literally going into a day, hour by hour, and understanding your revenues, your costs, and what strategies and decision making you can do based on that.
Yeah, because it will show you the cost, the per delivery, total profit. It'll show you all of that here in each of those tabs. And one thing to note, these these cells here will not edit the calculator tab. So when you edit these cells, it will edit up here, and these will adjust dynamically based on what you input into the calculator, but it does not go the other way. As you edit these cells, it does not change the calculator. So as you edit the cells that are in yellow, if you want to look at it hour by hour, just look at the top lines in each of these 3 tabs to see that comparison. So with that, I say happy sailing and good luck. There's a lot of options out there. And as Ryan talked about, as Angela said, not that we're looking for one as the right answer, but that this helps give a good framework and to think through it. And not that there's every single variable that's included in here, but it is meant to give you a good jumping off point to think through things.
Yeah, and the only thing I would say, sorry, Angela, would be, as you guys can assume, Zach and I are a little bit data obsessed, maybe for better or worse, but we welcome feedback. So we want as many people to use this as possible. We're here to help any way we can. As we sort of mentioned, all different shapes and sizes of restaurant operators out there. So if you have any feedback, please let Angela know, and we'll do whatever we can to shape and mold and make more useful tools for everyone.
Yeah, and I just want to say thank you so much to you guys. I mean, these guys spent a very long time and very many hours and sweat equity into this native delivery TCO calculator, and also just in the native delivery work group in general. RTN is an organization that wants to help restaurants solve technology challenges. And we do that by bringing technology talent to the table to create tools like this. So without the volunteer hours of some really smart minds in the industry, we wouldn't be where we are today with this tool or with any of our work groups. So thank you, Ryan and Zach, for joining me today and walking through the explainer video. And we'll look forward to seeing you guys on the webinar on December the 8th. And thank you guys for all of the work and effort you put into creating such a great tool for the industry.
All right, thanks, Angela.
Thanks so much, Angela.
Guys.
Bye, guys.